Hello and welcome to the Wednesday check-in brought to you by David Gockstein. I am your host Landy and today is April 8th, 2026 and we're looking at oil today because I did talk about something on Monday and in the days prior or weeks prior rather, and that is about the 115 to 130 macro overhead resistance. And on Monday, I stressed that if you're long oil right now into this macro overhead resistance, you should be very, very careful. And I was correct. In fact, I talked about a few of the different areas of interest along the way to the downside, and we did see one of the major areas of interest actually get hit and hold up, and that's between 90 and 95. Let's go ahead and take a look at support and resistance here on WTI. And you can see that, on Monday, I talked about the tap on the overhead resistance, this big macro zone at around the 115 area to 130 as a larger zone of interest. Now, of course, we did see the initial spike at the start of the conflict in the Middle East over here to around 119 and a half, 120 area. And again, this is WTI. So, and this is the one that I would watch along with Dixie. And in this case, we saw that when we had the initial sell-off, we actually came back to an area of interest that that's very important, actually, and that's around the $74 to $76 range. Nice bounce off there. And then the other big area of interest, even on the way up that I was previously talking about, was around 90 to 95. So you can call it 90.71 to 90, 4.99. Just call it 90 to 95, whatever you like. In this case, we did actually see, after a nice move above that area, some resistance around the daily area, right? So around the 102 and a half here, we saw the high come in. Some close opens are just over $100 there, nearing 101. The area of support here between 90 and 95 hold up. And then I was looking for below 90, around $85. We ended up getting down to around 84.37, so a little bit deeper to actually hit the basis band here directly, and then stick on top of it here, move back above 90 to 95. I had talked a little bit about moves above that 98 to 102 and a half. In the near term, we could look 105, 110, 110 to 115, and we saw, of course, after the move above the 105, 106 area, we saw a high come in. Well, we saw the close open come in right at 105. So we hit that target directly and swung above into the 105, 110 region, came back down, found support on the actual open here to the high directly. And that was around that 98 to 102 and a half. And I talked about this quite a bit. And I said, beware of the overhead resistance. Very likely going to get hit 115. And then on Monday, what did I say? Just watch it in this area because this is a zone fraught with peril. And what did we see? On the Tuesday session into the Wednesday session, we saw a move right back down to the 90 to 95 level. And for a while, it was kind of sticking right on 95 here. And we actually now have price parity again between WTI and Brent. And the premium has kind of gone away on WTI. So we'll see what the next couple of weeks hold. And I really would tell you, ignore the noise. Ignore the noise online. The truth is in the charts. It's going to tell you the news before the news. And you shouldn't really buy into any of the narratives until there is, concrete action being taken. In this case, by the United States. And that's not going to wrap up for quite some time. I'm going to tell you right now, like, it doesn't matter what is coming out in terms of the media narratives. It's going to be a while before any of those ships leave that strait area. And I do mean United States Navy. And I don't really foresee too much happening. We have some movement through the strait. Like I mentioned this on Monday. There is some some independent reporting, where people have gone to the strait and visually observed and verified that ships are moving through, turning transponders off on one side and then turning them back on the other. They're going through unescorted. And this is, so there is movement, but it's not fully open. And it's not fully open, and I'm going to discuss this for just a quick moment. It's not fully open because operationally speaking, there is a buffer zone around the United States Navy. And if you get inside of that buffer zone, you're in trouble. All right. It's not just about Iran. Iran doesn't have a navy there. They can threaten strikes against ships in the straits. We have seen a few get hit. And realistically, what it comes down to is the United States Navy is parked there. And I know this goes against what the media is telling you and maybe what your favorite influencer is telling you, but this is reality when it comes to shipping. But you have the United States Navy there, and then you have the insurance for the ships going through. Those are the two biggest factors that are actually holding things up in the strait. It's not actually Iran. A lot of what they are talking about is threats of, strikes against ships. What that does is that does have an impact on the insurance side of things because it raises risk. You don't know who they might target. And if those, if that potential targeting can be mitigated in any way. And that's regardless of what you're hearing about ceasefire, no ceasefire, talking points for negotiations. None of that really matters when you're looking at the on the ground. How are we moving this thing from A to B, right? So when looking at price, it was very obvious that something was going to come about narratively when right up against that resistance. So we saw, a front run of it. We saw a direct test, and then now we've seen a swing above. So a front run, direct test, and then a swing above into the overhead resistance, and then absolute annihilation right back to support. All right, so that's quite an unwind. I wasn't the only one looking at this, and this was not purely news driven. All right, there was 3 days of preparation, all right, from market participants here. So anyone telling you like no one could have seen this coming, I've been talking about this for a long time. I talked about this move into this area at the very beginning of the conflict, like literally the day after. So this is not that hard to watch from the chart side of things and the trade side of things. So don't be trading based on the news. Watch the chart. Now, that being said, with WTI oil holding above 90 to 95, it's strong. It's kind of like holding above 70 on closes for, silver at the time. And still, we're going to go check on that in a moment. But holding there after getting above and reclaiming, especially on weeklies, very, very important areas. So kind of acting as an inflection point. Anywhere below 90, looking right to, 84 to 86, 85 is a break even there. Anywhere below there, looking right back to the 74 to 76. All right, so kind of a $2 buffer there. Anywhere below there, we're looking right back to 68 to 72, 68 to 70 area. If we do see this area hold up, especially above 95, things are a little bit stronger. There is some local overhead resistance between that 98, 102.5. Anywhere above there, look right up to 105 at the close open here, and this high around that 106.86, 107 area. If we do see closes back above there, the most recent highs, that being the ones that just went in and tested the overhead resistance, are very highly likely going to get run again. And that does open up potential targets to the, and we're going to go ahead and adjust this real quick so that we have the overhead resistance here. We're going to make this actually purple because this is a daily area. It's not quite like a massive area of overhead resistance. So we're just going to recolor this to purple. And I don't know, maybe that purple. There we go. All right. So that is also right around the upper first standard deviation. Any move above there, essentially looking 110 to 112 here, and then up to 115 for a run of this area, or an attempt to try to run the high here at 117.63 and maybe even 120. If we see a closing reclaim of 115, if we haven't already tested, the 125 to 130 area near the highs of this overhead resistance, then I would be looking there. So again, be very aware of 90 to the downside breakpoint. Kind of, you can look and you can play the daily close opens, and you can take a look at like 88 to that 84 area, but closes below 90 start to break things down. This is a trend break also on a closing basis for the daily. So be aware on the any moves above the 90 to 95. Be aware of any moves that fail back towards the high side structure again in lower high fashion. We could start to be looking. We're starting to possibly be seeing a trend shift. It is not in play just yet. This is simply a trend break on a close and a swing. So we still need to be aware of the criteria. Watch for 90 to drop. If that does happen, 84 to 88, 88 to 86, going to be kind of the area to look. If that breaks down, we're looking, mid 70s from there. To the upside, above that, 105 again, beware of, swinging that high around that 107. But realistically, it's going to be paying very close attention to that upper second area, 110 to 112. And if we start to get a reclaim of 115, then we're probably going to be seeing some higher prices testing the actual high of the move more recently at the beginning of the conflict around that 120 area and potentially more. All right, let's go ahead and take a look at a few other things. How did gold react? Well, gold's kind of doing the same thing that we have been talking about. I did say to beware of the higher low structure here, but that it is going against the trend, against the volatility trend. So upper first is going to come down and test this high around that 48.60 area, and that was quite a rejection on the Wednesday candle. So beware of the railroad spikes here around 46. Anywhere below there, we're looking essentially 45 and potentially under down to 44. And if that breaks down, we have to pay close attention to this lower second standard deviation around the upper, 4250 to 4300. Of course, if we do see this trade back above, around the 4860, 4900, 5K to 5100s in the cards for a retest of this area overhead. Silver still holding up. Remember, it did lose on a daily, but not on a weekly. The $70. Actually, did it lose it on the weekly? Yeah, it did lose it on the weekly, but it hit the lower first. So I'm mistaken there. But this is now a downtrending structure on the weekly for lower high, lower low, lower high close, lower low close. But this is going into a consolidation or compression on the weekly. I'm actually going to talk about weeklies with silver here because I think it's a little bit cleaner. Back above 70, I've mentioned that, we could potentially see the 75 above there looking 78 to 80. What did we get? We got 77.63, so not quite 78, but that's right around the basis band. If we start to see this area reclaimed, this close open higher low structure around 76.50, beware that, the mid to upper 80s potentially in the cards. Obviously $80 even. We've got some areas of interest around the $80 region for the weekly here. But if we start to see 80 crack, 80 to 88, and even up to 90 by the upper first is fair game. In a compression, I would wait for resolution and or any downtrend break of 96.39 here on the high. And that's right around, the 94 to 95 area on closes. And then we could look back to $100 potentially more on expansion, but I would be very, very wary of that. When this is going from expansion into compression, I'd be remiss to not tell you that I wouldn't rule out a further downside move, to be honest with you, in terms of bias. But the weekly could, if the weekly holds up here, again, 70 is going to be kind of the name of the game. Hold up above $70 an ounce, and the weekly could absolutely go for that upside move. And I would be paying very close attention on any closes above, 78 to 80. Look to 85 to 88 and potentially rope in 90 up here, which is this high that got rejected on the dailies. So, just pay close attention. And I think that if we see the bid fall off for oil, we're probably going to see a rotation back into silver and gold. That's just kind of anecdotal, but I'll explain that if we start to see it happening, if we start to see that trade happening. All right, so Dixie, falling right into the bucket, right into the areas that I talked about on the daily, and hitting the 98 98 and a half level right around this low side structure that I've been talking about, that swing low. This is now, of course, a downtrend, and this is an actual downtrend that is, in danger of going in expansion to the downside. I don't know if you think that's dangerous, but obviously this would mean that we're likely going to see oil head down further unless this starts to reclaim some key areas back to the upside here. So with the big old gap down, swing at 99 and a half, or I'm sorry, 98 and a half, this low side here, anywhere below there, we could start entertaining the high side around 98 and potentially the low side here around the 97 and a half to 97.40, 97.35 to 40, I should say, before the actual support area down here, which is right around 97 to, you can call it 96 to 97 for a little bit of a wider berth there. In this case, back above, 99.30, reclaim of this low, look very closely at 99.60 around the basis band. If you see this area, if we see a failure to break back above around 128 cents to that 140 cent region, very highly likely this will continue to work its way down towards the supports. Now, that could be in the cards, but beware of any closes back above 140 cents. That's where we're looking at the high side structure again at 164 cents or so, and the potential for this to run, this area up here, right, which is going to be our 101 to 102 area, and then just above there, any kind of escape velocity on expansion or volatility expansion above the 102 level, we're looking at 103, 103 and a half, and 104 pretty quickly thereafter. So that would, of course, coincide with prices heading up. Now, why have I spent so much time on this? Because, one of the things that I talked about on Monday, and we're going to go take a look at Bitcoin, and, use Bitcoin as a vector for measuring kind of what's going on in crypto at all. But in this case, there was some testing going on, some risk testing. So meaning that there was a little bit of risk in the early session on Monday being put on the board. So the market desired a bit of a risk rotation. And then we saw, that it kind of got pulled back a little bit later on Monday. There was, the different press conferences and then all of the different discourse going back and forth. Reality is that risk was being tested in markets, right? And we saw that move up and then rejection for Bitcoin, right? And I had mentioned that we need to see this trade back above, 69,285 and then get above 70 essentially to 70,500 to test 72, 72.2 and above. Well, that's exactly what we saw, right? The risk appetite has proven out, right? And with the rejection in oil and Dixie selling off and gapping down, we saw a nice big move up in risk assets. And yes, even Bitcoin is trading like a risk asset. It has been trading like a risk asset for a very long time, despite what Larry Fink and all the rest want to tell you. The market still views Bitcoin and cryptocurrencies in general as risk assets. So in this case, we need to see closes above the upper second here, 72.2. We did get a downtrend break on a close, even went for the next high, broke that, not on a close, did not get a close above 72.30 here, but we did see a swing above. So last high or low is still going to be 65,696. So 65,700 essentially on the swing, and that close open there at 66,900. So basically $67,000. You can call it like a $500 buffer there. That is the last high or low. If we start to see 70 lost by the upper first, take a look at the high side structure for support. You don't want to see closes below 68, 68.2 to around that 69,285, 69.3 that was just broken. Essentially, it could come down and test around 68,000. You don't want to see it closing below there. And a strong retest on any kind of a move back down would be right around 69, that can recover back above 70,500 and start working the highs again near 72. That'd be your strong outlook there. And we can see that we are, man, this doesn't look like it really wants to break out, but again, if we do see a close above 72 to 74, 74 to 76, 78 to 80, it's literally take it 2K at a time. So 72 to 74 on the swing, to 76, and he closes above there. If we haven't already tested up towards 78, that's where I'd look, and then 78 to 80 as one of the primary bearish retest zones to pay attention to overhead. And he closes above there. I'm looking mid to low 80s, 82.5 to 83, and then all the way up to that weekly at 86. Now, of course, I'm not showing that right now, but I do think it's important to know that as long as Bitcoin's trading closing above $65,000, I think that the upside remains, at least the top side of this range remains the potential. Pay very close attention to around 66.5 to 67. If we see that fail, take a look right there at $65,000. You see the lower second is there. If we do see closes below there, we're getting expansion into the full area of this support that encompasses 62.5, and he closes outside of there. We'd be looking for expansion back to the lows, 58 to 60, anywhere below there. Obviously, mid to low 50s. So 54 to 56 initially is where I'd be looking, and then that goes all the way down to 52.5. And then anywhere below there, really on close, I'm looking $48 to $50,000. Now I know this says 48 on my chart, but I'm telling you $48 to $50,000 would be the primary area to pay attention to there, just like 58 to 60 on a swing right here in this local area. Anywhere below there, I'm looking mid to low 40s. So you can see that 42,300 down there being a very key area that I'm going to bring back here. Hold on, because I hit the wrong button. Really quickly, we got some positive price action in traditional markets. Let's wrap this up though. I'm gonna pay a little bit more attention to this on Friday. Big gap up, big reclaim for Dow above the 47,850 area. This is a big zone. Beware that if things come back down, just beware of like 46.5 to 46.7. That's going to be right around this area here by the basis band. Anywhere below there, it's right back into weekly territory, 45.5 to 46.3. When looking at NASDAQ, big old gap up, trend breaks, great. Now, pay attention to 24.5. Anywhere below there, 24.2 to 24K inside of a weekly zone. We have some interest in there, and that'd be, essentially below 24.5, look 24.2 to 24. Anywhere below there, it's the 23.7 or so area to pay attention to. Again, big, nice downtrend break. Going to talk more about this on the Friday wrap up with you. And of course, we saw an even nicer SPY reclaim. That SPY reclaim right in the area, by the way, right in that 675 area. Just giant rally in futures that led to the big open above the 675 area. So again, anywhere below there, this actually has some room down to, I would say, right around the 667 to 670 area. So about a 3-point area to pay attention to. Right here where this red line is by the upper first standard deviation. Anywhere below there, looking 662 to 665 right here at this high. And if that falls apart, 657 to 660. If we see any breach below there, then we're looking in this big 10-point range, 647 to 657 as being the primary area you want to see hold up. Nice downtrend break. Again, going to touch on this quite a bit more on Friday, because I think that things will surprise people, especially if despite what you're hearing in the news, especially if we see oil continuing to head down, if it does recover well and and the downtrend the setup that's in play for oil. Let's go back to oil real quick so that you understand what I'm talking about while I'm talking about it. Okay, we have a downtrend reversal setup that is in play with the trend break. Okay, so with the trend break, let's go ahead and get rid of support and resistance here, which you got to pay attention to. And we can go ahead and throw this in with our actual support and resistance stuff here. All right, so one of the things to really pay attention to is potential continuation down, right? So we have the uptrending structure. I'm just going to take the portion of this trend that we have here, right? So we have the uptrending structure. Now we have the trend break, right? Now, this wasn't just on a swing. The close was essentially right on and slightly below this low. So the setup would be either get continuation down, right, into some lower levels, or things head back up, right? It recovers off of this low, makes a lower high, and then heads down. That's the trend reversal setup. Now, even if it continues lower, then you're still looking for the reversal setup, meaning the actual reversal setup. Otherwise, we would have to entertain a deviation, right? And this mobile setup, I always kick it. I'm so sorry if you can hear that. I always like knee the ever-loving crap out of this little mobile setup that I have. But yeah, you just have to be aware of this being a deviation. Of course, like I said, anywhere back above, the 102.5 area, pay very close attention to the 105 to 107, and then it's all about 110 to 112 by the upper second right now. Anywhere above there, I think we're going for the highs. This becomes a deviation of trend. So that's what you need to pay attention to. And other than that, that's all I got for you today. Please like and share this out there if you did find this helpful. Catch me on the breakdown with David at 12:15 p.m. Eastern Standard Time every day, 9:15 a.m. Pacific Standard Time. Of course, come back here on Friday. I will have, of course, the Friday wrap-up, where I will be discussing what I'm seeing in traditional markets a little bit more. Of course, we will follow up with oil, commodities, obviously Bitcoin, and cryptocurrencies. I think that a lot of what we're seeing, though, I think it's important to have the context of what's happening with oil and Dixie when it comes to actually understanding what's going to be, more likely to happen for something like Bitcoin and cryptocurrencies by virtue of looking at Bitcoin. So I appreciate you all who do like and share this out there, and I look forward to speaking with you again on Friday. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, Landy out. Take care.